Okay, everyone, I know you're grabbing your lunch. Please feel free to continue eating, enjoying. We have our next panel up talking about how we think about impact investing and thinking about raising capital and capital sources, looking at this global, we talked about South Carolina, thinking about this global landscape and sort of what's changing, what's transforming, how we translating capital to impact, similar in terms of Mark's discussion just about, the skepticism and some of the things that are happening out there. So what is the framework and how do we make sure that we are successful in thinking about true community economic impact and making sure that translates to creating the true economies that we want and serving people that we need to serve. So we have Jen Gionvannitti and Sandy Wiggins and Andrea Armeni. Their bios are in your packet as well, and so we're going to hand it over to Jen. Thank you.
All right, thank you. So please enjoy your lunch while we get started with this panel. You can see there was a lot that was packed into today so that you could maximize your time here in Greenville. So if you could just spend enough time eating as well as paying attention, we'd appreciate it. As Tammy mentioned, I'm Jen Gionvannitti with the Federal Reserve Bank of Richmond. We're so pleased to be part of this event today. It's been great working with the South Carolina team and seeing the innovative work that they're doing and also their vision for the future. Just a big thanks to Deborah, Michelle, Gage, Tammy, the whole group. It's been great. So as the program's moved on today, now what we want to do with this panel is see what some of the national leaders in the space are doing to help us think about making investing easier on the local level. We have Andrea beside me, and he's going to kick off talking a bit from his perspective and a bit about his work, and then moving on to Sandy Wiggins after Andrea. And what we really want to do is hear more about the frameworks and the systems that are necessary to facilitate this kind of work in the state of South Carolina, and also rethinking investment at that global level to bring it down to the local level. So with that, their bios are in the program, as Tammy mentioned, and I'm going to hand it over to Andrea.
Thank you. Thanks, everyone. Thanks for having me here. I came from San Francisco, so that in itself should qualify me as an expert. My second qualification is as Executive Director of Transform Finance, a nonprofit that aims to bring more of a community-centered and social justice approach to impact investing. So essentially solving some of the issues that the speakers brought up earlier in the morning. What is impact investing? What kind of impact is it having? Who gets to determine it? How do we measure it? And as I thought about the brief for today's conference, really this idea of rethinking investment from global to local, I thought, yeah, that's a part of it, right? We are all probably in agreement that it's a good idea to relocalize the economy, to relocalize the flows of capital. But we can also go a little bit beyond that as we think of frameworks and tools, of frameworks and systems, and thinking, well, ultimately for the conversation that we're having today, capital is a tool. Capital is not the end, but it's just one thing that we can use in order to achieve the change that we want to view in our local communities. And once you see that, you can move away a little bit from this idea, well, what kind of returns am I having? Are they market? Are they concessionary? What type of asset classes am I going to invest in? And saying, well, that matters a little bit once you get into the weeds of it, but at an earlier level, when we're still trying to determine how we want impact investing to look in a particular locale or in the world at large, we can look at certain principles that are going to favor that type of result. And from my position, is the one that I will bring to you, is really this idea of bringing a social justice approach and a community-centered approach with deep community engagement to the work that we're doing. And to do that, let's think for a second of a comment that came up a couple of times earlier this morning about whether impact investing is serving two masters, right? You have the financial returns, you have the actual social and environmental impact. You say, well, yes, but ultimately, who are we trying to benefit through this? And my answer for that, and I think especially when we're having a geographically specific event like this, ultimately we're trying to serve communities. We're trying to increase the well-being within those communities. Well then, great. We have our master. That is the master that we're going to serve. The returns are going to be part of that tool, right? We need to have some form of financial returns depending on the type of investor. But the returns are not the financial returns are not the end in itself. The financial returns are a way of making this type of investing sustainable, of getting more people to join this field, of seeing more and more capital flow and more projects getting financed and funded the way that they should be. So what does it mean to engage communities? What does it mean to take this more social justice approach as you're setting up an entire impact investing framework? For me, it really boils down to a few principles, again, that are relating to this idea of keeping the eye on the ultimate prize, of helping communities drive the change that they want to see. So if you're serious about this, if you say, oh, I'm investing because I want to see certain progress within a certain community, well, to me it makes sense that the community itself should be engaged in the process, right? We don't want this to be an outsider-led process with no accountability, with no co-design, but rather we would like to see something where the community is actually engaged in design of the project, saying, hey, you're coming here for something that is actually going to help my community. Well, I should probably have a say in what that is going to look like. At the governance level, even more complicated. It's very rare to find projects where the community is engaged in the governance, with the exception of some relatively new initiatives like ours through own that Calvert Foundation started. And it's also important to have an engagement of the community in ownership. And the reason why I focus on ownership beyond the metaphorical ownership of projects is really because just by job creation, just by low-income housing, we're not going to move out of cycles of poverty. People really move out of poverty when they start having their own assets. There are massive asset disparities in the United States between white communities and communities of color and immigrant communities especially, and that gap is just widening. And it has been widening dramatically since the recession as well. So thinking of the community engagement at these three levels is one of the fundamental frameworks that I would use. And the second is what, using the language of the working world, we call non-extractive finance. So again, if you're financing impact investing projects within a community, it makes sense to look deeply at whether you're creating value within the community and that value is being captured and extracted or actually remains locally. And it has been an unfortunate result of a lot of the more successful impact investments out there, or the ones that are touted as such, that they have been successful for the investors, they have been successful for, let's say, the environment in the case of renewable energies. But you look at the communities themselves, and they are in the same shape that they were when this investment came in. So can you really say that you've done something that has impacted positively this community? No, we think that you need to put a lot more thought into where the actual flow of money is. Money is coming in with the investment. Is it coming out in the form of returns, or is some of that value remaining and not being captured? And the third part, that of course encompasses everything else, is around the fairness in the distribution of risks and rewards. So because a lot of people come to this from an investor or a traditional investor background or a banking background, you always try to see, okay, how much can I de-risk the investment for myself as an investor? What kind of guarantees can I get? As opposed to saying, well, we're kind of all in this together. Let's have a fairer allocation of the risks and the rewards between all the actors that are involved. The states, the investors, the community, and the entrepreneurs that are largely running these projects. There is a beauty to this as a framework, I think, which is that it works across all asset classes that you might be looking at within your community. This is something that you can do with respect to your cash management. You can certainly move some of the money from one of the big banks to your local community banks or local credit unions. You can do it in your public equities and public debt portfolio. Should I really buy public bonds that are, financing the building of new lanes for the West Side Highway in New York City and have a great risk profile? Or should I invest in public bonds within my community itself? Might have a different risk, but I also have a bit of a better sense of what it looks like here. I can de-risk it myself by being actually engaged with this community. One thing that I think is particularly important to look at in this case is, again, deepening the discussion, let's say, with some of the standards that we're deploying. Because of CRA rules, a lot of impact investors are looking at job creation as one of the metrics. And job creation itself, is a fairly flimsy metric. I think there is a general agreement around that. It's hard to say that you've created a job as opposed to displaced a job. You've closed one store, you've opened another store. Okay, have you really created those jobs? No, not necessarily. But also, in the US, again, recently more than before, unfortunately, besides an unemployment problem, we have an employment problem. We have people that are working full-time, we have working families that can't make ends meet. So any kind of job is probably not going to be what gets people out of a cycle of poverty. And more investors now, at least the ones that we're dealing with at Transform Finance, are looking more thoughtfully about, okay, what kind of jobs is it? Is it a good job? Is it a good enough job? Does it have a living wage? Does it provide paid family leave, for example, something that is not mandated at the federal level? Does it have opportunities for advancement and opportunities for ownership on the part of the workers itself? The reason why I focus on this is in part because it's a big issue now in the investor network that we run. A lot of investors are looking at investing in job creation and saying, okay, let's see just how far can we push it. There is a good business case for good jobs. There is a good social case for them. But the important part is that it's something that is actually implementable, right? You can look at investing in one of the big funds, let's say Huntington, DBL. They are deploying this year hundreds of millions of dollars for job creation in lower and middle income zip codes. You can say, okay, guys, that's great. Let's look at what floors there should be. What is the minimum that a job should do in order to be considered an impact investable type of job creation effort? And then from there, let's have a ladder of implementable steps. And this is something that is working. You bring a perspective like that from the point of the investor, or in the case of South Carolina, I'd say from the standpoint of the state government itself, and say, these are the definitions that we will have. This is what we would like to see happening within the context of job creation. If you want to have access to whatever funding, tax credits, etc. are available, let's have some minimum and let's have some ladders that will help us get to better and better jobs over time and more ownership by the workers in the community. The second part of what I was asked to look at is, okay, what can the government do? What can local actors do? And how can we leverage the power that the local community can have in this? The first thing that I would say around this, besides standard creation, is de-risking. So instead of looking asset by asset, let's say, oh, I want to invest in real estate, I want to invest in private equity type of deals, VC type of deals, or do loans, as many do. Say, well, let's look at this as an entire ecosystem that we need to build out holistically. Which role can I play as a meta level type of actor in this place? And how can I de-risk some of these activities? That space is growing now in terms of what loan guarantees can look like. Again, from local community foundations, for example, that Sandy is very familiar with, from the governments themselves, from the local banks that are doing some of the CRA work, looking at first loss within this capital stack, saying, okay, where can I come in and have the highest level of additionality? Yeah, I could come in for fairly safe returns down the road, but if I'm there, we'll never get to solve this question that a couple of people have already asked me this morning. Hey, Andrea, where are the deals? Where are the investable opportunities at the $1 million, $2 million level? Well, if we want deep, meaningful, community-based projects, we need to get them to that point. And that means having technical assistance, that means having capacity building grant, investing in the field building, in the ecosystem, in the intermediaries and this. The other thing that can be done is taking communities seriously. So ensuring that we have accountability not just to the investors, but to the communities themselves. Ensuring that they become a part of the definition of impact. Again, JP Morgan did its thing, World Economic Forum did its thing, but it's rare that you see the community really having a voice and say, hey, this is on our skin. We want to be able to say what impact would look like for us, what a good result would look like for us. So let's keep that in mind as we develop the ecosystem here. And borrowing another thing that came up earlier from the urban development experience. So some of the most successful projects in urban development, especially sustainable urban development in the country, have come from this co-design, human-centered design type of approach that is now available for the investing community as well. Building this bridge between the finance community and the local community leaders, social justice types, two things need to be done there. We need to bring this community approach, community-centered approach, to the finance community so that investors and others can say, oh, okay, I understand what makes sense for communities, I understand how I can benefit them, but we also need to bring the finance approach to the community leaders, to the social justice leaders themselves, by way of training, by way of socializing some of these ideas, by way of really making it clear that finance is not your enemy, right? Breaking away from this idea of we are 99% and Wall Street is bad. No, again, finance can be a tool to make more money. Finance can be a tool to make more change. Here is how it can play out in your community. And that's how you start building that pipeline so that over time you will have a very healthy series of opportunities in which you can invest locally. And the last thing that I would say, before passing it on to Sandy, with respect to this local emphasis on local problems, local solutions, local capital, where the returns remain local, it's the idea of changing the face of investing a little bit as well. And I see this particularly out in the Bay Area, where frankly most of the actors in this space still end up being, Ivy educated, or people that come from Blackstone, people that come from Goldman Sachs and have had a bit of a change of mind. No, let's try to really nurture a local community of leaders within the community investing space. People that are coming up from the ranks of having lived some of the community problems on their own skin, and that will both democratize the process in some ways and bring more of the emphasis on the local solution, the local mission that we're going to this conversation for in the first place.
Great, thank you. Would you like to pick up from there, Sandy?
Sure. Well, I think you're gonna hear some similar themes from me as you did from Andrea. So I wear a couple of different hats relative to the conversation today in this room. I chair an organization called Valley, the Business Alliance for Local Living Economies, and we've got a Valley fellow sitting here, Jamie. And I also act as a senior advisor to RSF Social Finance, which is based in San Francisco. So Valley, I'll just give you a little history there. Valley is an organization that really is standing in service of the emergence of vibrant, what we call local living economies. We believe that the bricks and mortar of a vibrant local economy are locally owned independent businesses, that ownership really matters. And that relationships matter. And so the ultimate vision of Valley is that within the next generation, we'll be able to create an ecosystem of vibrant local economies that really are meeting the needs, I would say exceeding just meeting the needs, are really providing a vibrant quality of life for all of the residents of those communities, and are interconnected. I mean, we can't go back from a global economy to a completely local economy. That's not what we're talking about. We're talking about a new kind of paradigm where local economies really operate in a state of resilience and a kind of self-reliance, particularly when it comes to basic needs like food, energy, and water, but share their gifts with the global economy as appropriate, drawing on the unique cultural and physical resources of their place. RSF is a nonprofit financial services provider whose purpose is to transform the way the world works with money. So that question, the purpose being to transform the way the world works with money begs the question, to transform it from what to what. And so that transformation that we're looking for goes like this. We currently have a financial system that is complex, opaque, and anonymous, and focused primarily on short-term returns. And the transformation that we would like to see is to a system that is direct, transparent, and personal, and based on long-term relationships. Okay. So why is that important? It's important because of what every one of us in this room truly cares about. You know, when you peel back the layers of our professions and different political camps and everything else, ultimately we all care about the same thing. We care about the quality of life that we live. We care about our families, those that we love. We care about our place, you know, and our relationship to that place. So distant, complex, opaque financial transactions are really divorcing us from our place, are breaking down, in many respects, the fabric of society, and destroying the environment. So just a quick poll. By show of hands, how many of you in this room have 90% or more of your assets, whether they're retirement assets or discretionary assets, in mutual funds, public equities, the bond market? Right, so vast majority. How many of you in this room really understand what those financial assets are doing, what those companies are doing with your assets, how they're treating their employees, the impact that those assets are having on the environment? Right. So there you go. I mean, and that's what this is all about. Now think about what it would be like if your financial assets, or some portion of them, some significant, meaningful portion of them, was invested in your community, whether it's Greenville or wherever it is that you come from. Invested in the local businesses, the local food system, housing, all the diverse assets that are available to you there. How would that change your relationship with your place? How would that change the kind of accountability that exists between you as an investor and the businesses that you're investing in? Right, so you start to get a sense for why this is so important. But of course, the world's not wired for us to do that easily. And I'll talk about that in a minute. So let's just to give you a little bit more about RSF. So RSF's primary modality for operating in this transformation is as a lender. So we have a series of funds. Our largest is called our Social Impact Fund. And investors put their money in our funds, like any fund, and they get a fixed return, and then we lend that money out. And our focus areas really are on food and agriculture, environmental sustainability, and education in the arts. And we operate nationally as an organization, as a lender, but we are our mission really is to support the vibrancy of these local economies. And so we're lending to the social enterprises that are helping these local economies thrive and survive. We also act as field builders. So because we're a nonprofit with this big purpose statement, part of our walking the talk really is to try to build the field of social finance to support communities in doing this. And we do that in many different ways. One of the ways that Andrea alluded to earlier is I've been working on a project for the last couple of years with community foundations all across the country. Community foundations, I'm sure there are many of you in this room know about community foundations. You come from communities that have community foundations. They're ubiquitous. There's more than 700 of them in the United States. And collectively, they have some significant assets, well over, it's actually approaching $500 billion at this point. Their community foundations are all place-based, right? They have a mission to improve the quality of life or the economic vitality of their place. And they do that as grant makers. And the community foundations have different complexions. Some of them are primarily discretionary funds. Some of them are largely donor-advised funds. Most of them have a mix of the two. We also have donor-advised funds at RSF, so it's a model we're very familiar with. But their investment assets are put into the same kind of investment assets that all of us in this room generally put our investment assets in. And so the basic thesis was, what if we could support community foundations in redirecting the flow of those investment assets into their place with mission, alongside of the grants that they're making. So we're working to do that, which kind of leads me into the next piece of this. So the framework that I see emerging in terms of local investing, what I would call place-based, mission-aligned investing. By the word, I really don't like the word impact investing personally. Every investment we make has impact. Some of it's good, a lot of it's bad, right? So thinking more in terms of mission-aligned investing just suits me better. So the framework that really needs to be created is the creation of what I call a community capital ecosystem. We need to be, and there are, in the many conversations I've had about this, it's really clear that there are different phases or areas or barriers that come up as we start to think about this. I mean, and the dominant ones are culture, strategy, capacity, and opportunity. So beginning with culture, it's how do we create the mindset in our community around this idea that it is okay, it's actually beneficial to the quality of all of our lives to begin investing in our own community, to put our capital to work in our place. And that's a big conversation. I won't say it's easy, but a couple of the examples I gave you earlier are sort of starter steps. And as communities get to the point where they're ready to move on, then they start to talk about strategy. So how do we do this in a way that makes sense for us? And I'm talking in generalities here because every community is different. But the next step really is to look at our community and see, what is it that we have? What are the unique assets of this place that we want to cultivate and celebrate and give greater vibrancy to? And what do we need? Well, every community needs access to good food. Every community needs energy. Every community needs water, things like that. So there are common things across communities. But communities also have their own individual needs. And then to start to think holistically about what can we do to actually support the emergence of the use of our natural assets and provide resilience and self-reliance in terms of these basic needs. What kind of businesses do we need? So now we're moving out of the domain of just investment and capital streams and into the domain of economic development, but in a very different way than economic development is typically talked about in our country. What kind of businesses, not what kind of NGOs do we need to cultivate, even before the businesses, they're going to help, create the fertile ground for this to emerge. So developing a comprehensive strategy around that. And you need to bring all the many stakeholders together around the table to do that, and all of the different kinds of capital providers. So another thing that we talk about at RSF and Valley is what we call integrated capital, breaking down the silos between gifting, philanthropic capital, and all the different kinds of equity and lending, and saying this is a continuum of capital. We are capital providers collectively, and what's needed in order to make this strategy succeed? What's needed in order to make this particular business or community of businesses succeed? It's going to take all of these. It's going to take philanthropic capital in some cases. It's going to take high-risk, early-stage equity in some cases, and it's going to take lending. And let's come together to look at this in a very holistic way. So then you're bringing together, the community foundations, the private investors, the community banks, in a conversation about this with a long-term vision about where you want to go and how you can move capital into your place. And of course, individual investors as well. And we're finding that connecting of the individuals who are concerned about this is a critical step. So one of the other things that we're doing at Valley, so Valley has three focuses. One is to connect leaders in the space. Another is to spread solutions, what's working. and the third is really to drive capital to local economies. So in the domain of connecting leaders and spreading solutions, we've started a local economy funder circle. So these are high wealth individuals. And they are from all over the country, but they have a common desire to activate their personal wealth in their place in a meaningful way. And bringing them together has just been in a community of practice, has spawned all kinds of innovations that are really driving dramatic change in terms of what they're doing. I'll give you just one example of that. So we have one member of this community of practice who is a high wealth individual in Southern California, and her particular concern, after much dialogue, really turned out to be, when she boiled it down, turned out to be soil health, the health of the soil. And so, with the support of this peer network, she has developed a comprehensive strategy, investment strategy, to improve the health of the soil in the place where she lives. So she's investing in lots of different things, but all of them have this relationship to soil health because she sees that as a way to really improve the quality of life and restore the damage that's been done in her particular place in the world. So strategy, capacity building, now this is not easy, right? It's easy to call up your stockbroker or go online and place an investment in a mutual fund or a public equity. It's not so easy to make a local investment. So building the capacity within your community to do this kind of investment is the next critical step. And there again, you need to bring the expertise to the table. A lot of this expertise exists in your community, but we don't think about activating it for local investment. So, the bankers, the financial advisors, the folks that know how to do this. And then opportunities, where are the deals? I hear that over and over again. And that cycles back to this idea that you can't just look at this as an investment strategy. You need to look at it as an investment strategy as a means to an end. Underneath of that, you need to think about local economic development and how we do that in a really holistic way. I think I've talked enough.
Great, thank you. Tammy, how much time do we have for questions? Okay, great. I've got some questions, but I'd rather defer to the audience if this is your opportunity. So I'll wait for a hand. If not, well, I'm curious to know, and I'm going to shoot this to Andrea first. With your investor network, you talked about the metric of, for example, creating jobs is flimsy. Do you lead that conversation to start to change how that network's working, or is there just a lot of give and take with those investors?
Solving together some of those questions is precisely the reason why we put this network together, to borrow from Sandy's parlance, as a community of practice type of working group. So the Transform Finance Investor Network, by way of context, came about with a group of early investors such as RSF Social Finance, Calvert Foundation, some of the big family offices in the United States, that really wanted to explore this as a lens more than just beyond deal making. Again, the first question they always hear is, okay, where are the deals? Where is the pipeline? And we said, let's pull back a little bit. Again, that's one of the things that you should be looking at. You're not gonna just find a bunch of deals, throw money at them, and problems will be solved. So let's start looking together. If you are sympathetic to an approach to investing that values your community, that values your attention to sustainable and healthy foods, education, whatever it is, where are the roadblocks right now? So what is it that is preventing more capital to flow in fundamentally positive ways towards whatever problem it is that you're looking at? Let's take stock of those, and they are generally issues like due diligence processes. How due diligence, for example, community engagement? It's not as easy as other types of diligence, right? Metrics, always a big issue because people want to see whatever the result has been without overburdening the entrepreneur or the management or the projects with 17 different reporting requirements. Alternative deal structures has been one of the big topics that we've been tackling. Alternative exits, because again, exits in impact investing are one of the biggest problems that still has not been solved. So our approach has been to say, tell us what is preventing you and others that are at the margins of this community from making more capital flow in the way that you want to see it, and let's solve it together. Some people have worked on one thing. It happened to me one week. I had conversations about diligence in sustainable agroforestry. And then I had the same conversation with somebody else, and these two folks were not talking together. The people are experimenting. This is a highly experimental area. Let's try to bring all that knowledge together. Let's try to figure out what we know, what we don't know, what we don't know, et cetera, and take it from there.
Okay, great. I'll kick another question to Sandy, and then we can look at what the audience has. So you mentioned that investing locally is not easy sometimes, and I'm just wondering if you could comment on some of the crowdfunding platforms that have allowed people to feel like they can do that a little more easily, and what that means for culture, strategy, capacity.
Yeah, well, I'm not an expert on crowdfunding, but I'm a big fan for sure. And I think, the previous panel was talking about ways that individual, non-accredited investors can get engaged, and I think I don't have a pat answer to how we solve that, but it's really critical. We need to find ways that enable everybody to channel their investment capital into their place in a meaningful way. And I think crowdfunding, and direct public offerings are starting to change the game, but it's nascent, right? We're in the very early stages of it.
And we're lucky to have Jenny Kassan, who's going to be on the next panel, who's the leader in this field. So hopefully she'll be able to shed some light.
A little teaser for Jenny's piece.
Yeah.
There's also this one of you brought up bringing the community-centered approach to finance, and vice versa, bringing getting community leaders more finance savvy. Which side of that equation is harder to achieve, in your opinion?
I would say the former.
The former.
Yeah, in my experience, getting people over the sort of mindset issue, the cultural barrier that this makes sense is a big challenge. Once people start to engage in it, they start to see the results in their community. They realize this really makes sense. But we're so conditioned to think that the only safe thing for us to do is put our money in mutual funds. It's a hard thing to overcome.
Well, I'm Italian. I'll keep asking questions unless someone puts a hand up.
Well, right up here.
I believe it's Mr. Wiggins.
Yes.
What exactly is the name of your organization? I heard you say BALLI. Is that B-A-L-I?
B-A-L-L-E, and it stands for Business
It's also
Alliance.
in the bio.
Yeah, it's in the bio. Business Alliance for Local Living Economies. Yep.
Do you have any success stories of how this local investment strategy has really revolutionized the community?
Sure. Well, here's a quick recent example. So in Philadelphia, there is a local business called Common Market. And Common Market is an aggregator and distributor of food that's sourced from local farms and local value-added food producers. So that business started out, but they actually they've been trying to get this business going for 8 or 10 years. But they finally got some legs under them about 6 years ago. And a group of local investors came together to support them, understanding the need for this. There were hundreds of local farms and food producers in the Philadelphia area who other than farmers markets, didn't really have a way to get their product particularly into underserved communities and institutions that served underserved communities. So it really took a combination of philanthropic giving, and very high risk early stage capital to get this business going. And as I said, that was just 5 or 6 years ago. They are now a borrower of RSF. They've grown. We just helped them finance a 100,000 square foot distribution center. And they now have, I think, 200 farms that are sending their goods through their 200 farms and small food producers. Some value-added food producers. So what's happened as a result of a community of local investors getting behind this idea is the growth of not just a single business, but hundreds of businesses that have, I would say, escalated the vibrancy of the local food system in Philadelphia to a whole new level. So that's a simple example.
We have one more question right here, Jen, and then wrap up.
Great.
Hi, my question is for Sandy. In that scenario in your work with Valley, how important is it to engage local government or municipalities in sort of this reimagining what's possible and shifting culture around how to invest and grow local economies?
Yeah, critical. Yeah, I mean, you know, I just came from Louisville, and I was just blown away by the mayor there, who gets this like in the marrow of his bones and is really reshaping what's going on in their community as a result of it. But it's really critical. I mean, the traditional path to economic development in the U.S. for the last, you know, at least for the last 20 or 30 years has been, let's find the big company that's going to come into town, and you know, we'll give them all kinds of concessions to do that, and that's how we do economic development. And what that ends up doing is putting local businesses out of business, and they're the ones that, you know, provide the, you know, the highest value jobs to the community, and the money that goes into these you know, out of town companies generally goes right back out of the community. So it's a different mindset, and so getting your town council or your mayor or local government, you know, behind this idea that everything's right here, we have it right here, and then you know, and there's lots of experimentation going on around the country. I mean, there are plenty of examples that people can go and look at, kick the tires, and draw from. But it's a very important step.
Great. Well, please join me in thanking Andrea Armeni and Sandy Wiggins.
And they will be around for a little bit longer to talk with them as well. We're going to have a soft transition here, so you may you know, want to grab some more drink or something, some more coffee. But to your point, thinking about how do we actualize this discussion around transforming communities and looking at capital and the continuum of capital, our next panel is really going to talk very specific about that, both to the crowdfunding discussion, how do you actualize that, as well as we have Carrie Van Winkle here, who actually came from Kentucky, and I think just had a slow money conference there, and Tracy Carte with Annie Casey, and then Liz Seltzer with the Enterprise Community. And they actually have a platform and a marketplace for making this stuff happen in real time. So going from framework to systems to strategic and legal aspects. So we're going to mic up, and then we'll get started in just a few minutes. Thank you.